If Trump really wants to clean the swamp, it's not just going after the bureaucracy, it's going after K Street, the lobbyists, the wolves of K Street. It's big tech, big pharma, big media, and frankly, even crypto, which was his biggest donor in this election cycle. If you're really going to be an independent revolutionary leader and really make America great again, you got to get rid of the legalized bribery and the base layer incentives, which is big business, which has killed democracy faster than anything else, in my opinion.
This is Little by Little with Andy Schechtman.
All right, everybody, welcome back to another episode of Little by Little, and I couldn't be more excited to have Matthew Piepenburg with me here today, one of the two owners or administrators of Gold Switzerland. He and Egon von Greyerz, two of the smartest guys I've had the privilege of getting to know, and well, welcome on, Matthew. Thanks for coming, buddy. I appreciate it.
Andy, as I said before, it's my pleasure, it's my honor as well. We're going to agree on just about everything, but I'm happy to swap thoughts with you today, for sure.
Right on. Well, that's good. You know, I'm all for agreeing on everything, but I'm also for, challenging my own narrative. I think that a part of the nice thing about doing this show is that I talk to a lot of people that maybe I don't always agree with, but I think learning other thought patterns and learning other things allows us to, I think, to become more whole. I guess what I mean by that is if you are so married to your narrative and learn more and more about less and less until you know everything about nothing, it doesn't do you any good. So even if we don't agree, I'm sure I will find value in what you have to say. But knowing what you talk about, I agree. We're probably going to agree on pretty much everything. Well, first and foremost, tell me about Gold Switzerland. What do you guys do, and what should people know and take away from what Gold Switzerland has to offer?
Well, a lot like you, we have a very strong conviction on precious metals in general, gold in particular, gold and silver, obviously. Our whole thesis is that fiat money, because of unsustainable, irrational debt levels in the U.S. and globally, got to the point now of the surreal. And we're really not speculators in precious metals. We're kind of boring, not so sexy. We're about wealth preservation. It's not just a hedge against inflation. We look at it kind of cryptically as, currency insurance for dying paper money. And so when you're at the wealth preservation stage in your life, whatever stage that is, whatever age that is, when you're, I'm all about speculation. I came of age speculating, but I'm at a stage in my life now, like many of my clients and our clients, that we want to preserve what we have for the most part. And we have a strong concerns about political risk, about banking risk, historical risk, and certainly currency risk. And whether you're making your money in Bitcoin or NVIDIA or the NASDAQ or the S&P or bulletproof glass or chocolates, whatever you're doing for a living, you're still measuring your money and your wealth in fiat money. And we're saying a large portion of that has to be insured through precious metals as a better store of value. And we also believe that you should have a legal firewall between yourself and the jurisdiction you live in to protect your wealth. And we think Switzerland, among many jurisdictions, is the best. A lot of our clients are from the United States. We have clients in 90 countries. We have the safest vault in the world in an undisclosed location, the Swiss Alps. This little private airstrip, and it's kind of a James Bond experience, EMP-proof mountain, and nuclear bomb-proof bedrock. But, it's a fancy place to hold gold, but it's really a simple method. It's just we don't believe in fiat money over the long term, and we believe gold is the best defense or hedge against the destruction of paper money and, due to incredibly irrational debt levels. And we believe in holding it in a jurisdiction where gold is a protected asset, where privacy is relatively better. There is no perfect jurisdiction. We think this is just a relative better one. There's all different kinds of ways to hold gold and silver, but that's how we've chosen to do it. Egon began this company over 25 years ago just for himself, and it just evolved into a friends and family circles, and then more people wanted to replicate his model. Our minimums are high, so it's 400,000 Swiss franc equivalent, or $400,000 roughly, for our vaults in Zurich and in Singapore. But for this special vault in the mountains, it's a $5 million minimum. So It's a unique kind of clientele, so we can give them the first class service and personal attention. But we speak to all people interested in gold, not just the ultra high net worths. But von Greyerz AG or Gold Switzerland is the largest gold provider outside of the commercial banks, and we really don't believe sophisticated investors in gold and silver should hold that in a commercial bank for a number of reasons, which we get into. But historically, we just don't trust them enough to want to preserve our wealth there. And we are, I think, the best counterparty risk you can have if you're talking large amounts of gold. But we certainly believe in talking about the asset class to anyone, even those who aren't going to make our minimums, because the middle class to the upper class need to be more aware of the risks they're facing equally. So, yeah.
You and Egon certainly are held in very high esteem by myself and by the entire industry, and that's a good start. Inspiring trust by the front men, of course, and by where you're based out of in Zurich. My business started 35 years ago, 1989, as representatives for BFI Consulting in Zurich, Frank Seuss and the fantastic group in Zurich, who we still have a little bit to do with, but I can vouch for Switzerland being the epicenter of sound money and of gold. And so I think that's interesting. I didn't realize it was a $5 million minimum, but certainly I think that I can see why. I mean, in such a massive vault inside of a mountain, EMP proof. I mean, I've never heard of something quite along those lines here in the United States. So for people with lots of money, they ought to check that out. And at the end of the show, not only will I ask you how people can get in touch with you, but also we'll post that at the bottom of the show notes here. So switching gears just a little bit, and obviously everyone's been talking about the election. What's your feelings on Trump, just on a broad-based scale?
Yeah, it is the question du jour. It's the natural question, and there's so many different ways to answer it. There's been such a loss of kind of faith and hope and such woo-woo in the last 4 years that I think there's a natural understanding for hope in a different kind of change from what we've just seen. And that's not to be, again, anti-Democrat or pro-elephant, pro-Republican, red versus blue. I think a lot of the problems, before I can even answer that question, we have to look at this kind of surreal experience that's happening in the world, in the U.S. and everywhere. And I get the benefit. You and I are both from the Midwest. You're from Minnesota. I'm from Michigan. I'm a simple guy. I had a German-speaking father, but, I'm typically American. So I have a very interesting view on America. But I also live in Europe for the last 20 years, off and on. And I see a lot of mood swings and political swings here in Europe. It's just been so crazy in the world in general, in the U.S. in particular. Again, whether you're red or blue, we should get past that, I think, to answer what's Trump going to do and what's happening now. I think, again, before I can look at Trump, we have to look at what America's just been through. And again, I wish it wasn't partisan, but I have to say, and I'm a former Democrat, like a Tulsi Gabbard and RFK Jr., who kind of got lost by his own party. Who has been the president for the last 4 years and for the last 4 minutes or the next 4 weeks? Who is this president? Who's making the decisions? That's a natural question. I know 3 years ago when Biden first went to the Democratic caucus, he wasn't making sense 3 years ago. The word on the street when I was in D.C. and Virginia was we couldn't understand him. And yet for the next 3 years, his press secretaries and his vice president and everyone around him said, no, he's sharp as a tack. And that whole lie, that whole illusion unwound during the debate, of course. So the first question is, just who's in charge? That was kind of creepy. Then we had this lawfare. And as an attorney, someone who went to law school and studied the Constitution and tough laws and tough decisions, from Georgia to the Southern District of New York to how many impeachment trials in D.C. and the laptop hoax and all this nonsense and 51, special signatures from the intelligence agency saying that the Biden laptop was a Russian collusion, that was all a hoax, and that kind of unwound. And we had this Fauci, whatever you think of it, fiasco, that the Wuhan lab leak theory was a conspiracy theory. Now it's pretty much clear that wasn't a conspiracy theory. We've had an immigration problem in the U.S. like we have in Germany and Sweden and France, and it's causing a lot of political unrest. Whatever your take on that is, we'd let in millions of asylum seekers. That created a lot of tension. We've had kind of a desperate market. It reminds me of pets.com and the dot-com bubble, or WeWork in the 90s. And now that we can get into the whole Bitcoin euphoria, hysteria, whatever you want to call it, we get into that too without mocking Bitcoin. And again, what I've seen in the political unrest, in the polarization in the U.S., Germany's coalition blew up the day after Trump was elected. France had a vote of no confidence yesterday for its prime minister. The UK, Tories and Labour completely disintegrating. We've got a classic, disastrous, intentional, avoidable war in Ukraine over rare earths and earth and money. To me, it's a no-brainer, but that's very debatable. But over 1 million people have been slaughtered in this, I think, avoidable war. You've got really the sanctions, I think, like Luke Gromen, I would say, was probably the stupidest thing America's done in its history in terms of its foreign policy, what that's done to the dollar, what that's doing to, obviously, de-dollarization, all the themes you've extremely eloquently been tracking better than just about anyone, in my opinion. We've got, we pushed Russia and China closer together in ways that nothing could have been easier to do. We have a recession absolutely on Main Street versus a ripping Pavlovian stock market in the S&P and the NASDAQ. And in the back of all that, so now we have the question, Trump, this disruptive figure coming in a very levered backdrop globally and in the U.S., and you've got Besson's coming into the Treasury Department. We've got new personalities, potentially the FBI, a border czar, kind of a burn it down, let's revolutionize things. Trump's got 2 years before the midterm to do this. So whatever's going to happen, it's going to happen fast and furious. Trump is many things. I'm a history geek. He reminds me of George Custer. And people think of George Custer of the Battle of Little Bighorn and the massacre there. During the U.S. Civil War, George Custer was this incredible cavalry officer, and he was one of those rare soldiers who genuinely enjoyed combat, who genuinely loved the fight. And he was a little loopy, a little crazy, a little courageous, a little hard to take, but he was sincere. I think whatever you think of Trump, and he could say a lot of things that are sensational, he can say more than you want him to say in some cases, but he's coming in with an agenda this time. Unlike 2016, he's coming in with he's grown up a little in the sense of what he's learned about the quote unquote swamp. He may be sublime or he may be ridiculous, and we can talk about that. But we're certainly going to see a very different Washington, D.C., and certainly with the Department of Government Efficiency, we may see a lot of pink slips in D.C., and we may see a lot of revenge in D.C. I don't know, but we all know he's talking about reshoring jobs. We all know he's talking about tariffs. We all know he's talking about mass deportations. And at the same time, he's talking about beating inflation. Again, I don't think you can have one without the other, and we can get into the weeds on that. But no matter what, there is a hope, because anything to a lot of people is better than what we've been through. To others, it's the end of the world when Trump was elected. But no matter what, big changes are going to come. And I think from inauguration on, we're kind of in limbo now. He's making decisions. Some headlines are coming out. But from inauguration on, especially in the first 2 years, all the things that we're going to be debating and speculating on, whether it's tariffs or whether it's, reshoring jobs or whether it's inflation or deflation, a stronger or weaker dollar, it's going to happen fast. And certainly the Bitcoin stockpile, all of this stuff is happening. I'm not going to say it's only about gold and silver, or the S&P and Bitcoin are a joke. They're not. A lot of things are going to go up potentially, including Bitcoin and gold, because of the inflation, which I think is to come. And yet at the same time, there's massive risks. And we have a market that's extremely Pavlovian. If the Fed is dovish, or if there's talks of more rate cuts, it's going to go up. And if the Fed is hawkish or the rates are going to go up, the market's going to react. It's what it is. It's a centralized market. It's not free price discovery. So long answer to a short question, and we can get into each of the stovepipes however you want to do it, whether it's the Bitcoin or whether it's the dollar debate or whether it's inflation or tariffs. But I think there's some change is going to come, and whether that's good or bad, let's hope for the best. But short answer is we're not going to get a lot of things he wants done without inflation. I just don't see how we get out of that. And because of that, inflation and currency debasement to me are the same thing. In the long run, that's very, very good for precious metals. Very, very good, as you know. And so I really don't look at the daily, weekly, or even quarterly or monthly price of gold and silver. I just know history. And when you're in debt to this level, without exception, countries with their backs against the wall will debase their currency to inflate their way out of debt. And that affects the guy in Minnesota and Michigan and Ohio, or the rich guy in Zurich or Palm Beach. It affects all of us. I think it hurts the middle class the most because they have the least they can afford to lose. And so that's appalling to me as a guy from Stevensville, Michigan. And yet as a guy who, talks to very wealthy folks all over the world, it's appalling to them too. But the wealth inequality that I've seen since I got out of grad school, and what I've seen with the Fed policies and what we've done to the dollar, how we've inflated the markets at the expense of the middle class, how those over 55 and plus, the baby boomers who got 70% of the wealth in the markets, they're fine. Your kids, my kids, are inheriting a nightmare, and they're going to inherit a debased currency, and they're also inheriting a very polarized social and political backdrop. So it's interesting times for all the reasons I've said.
Michigan and I'm Minnesota. It's that Midwestern thing that I knew I loved you the first time I met you. And you are a history buff waiting to go on stage together on a panel. We're talking about the Civil War and all the places I should go visit with my kids. You made one comment about as you were talking about the last 4 years, the bizarro world that was the last 4 years, one word came to mind, and that was a lie. And it just seems that much of what we've lived is a lie. And with an exclamation point with President Biden pardoning his son after promising us all he wouldn't. That you made a comment about the Ukraine that, again, you're very, very intelligent and very well-informed. And I wanted to read something to you. I wasn't going to do this. Wasn't my next question, but because you said this is debatable, I want to read something. I almost fell off my chair the other night when I read this. It was a Lindsey Graham giving an interview to Sean Hannity just the other night, and he says that the war in the Ukraine is entirely and only about money. He tells Fox News host Sean Hannity that the U.S. stands to financially gain from the Ukraine's vast agricultural sector and $2 to $7 trillion worth of rare earth minerals alike in a prospective wartime deal with the war-torn, albeit resource-wealthy nation. This war is about money. People don't talk about it, but the richest country in all of Europe for rare earth minerals is the Ukraine. $2 to $7 trillion worth of minerals that are rare earth minerals, very relevant to the 21st century. Ukraine's ready to do a deal with us, not the Russians. So it's in our interest to make sure that Russia doesn't take over the place. Ukraine is the breadbasket of the developing world. 50% of all the food going to Africa comes from the Ukraine, said Graham. Graham also emphasized that the incoming Trump administration is uniquely positioned to cash out on such resources. Trump is going to do a deal to get our money back, to enrich ourselves with rare earth minerals, a good deal for the Ukraine, really, and a good deal for us, Graham said, and he's going to bring peace. So to your point, we destroy the country, we kill millions of their men, we destroy their infrastructure, we enrich the military-industrial complex, and then who's going to rebuild it? BlackRock. We're enriched by starting the war and funding the war and rebuilding, and then we pillage their natural resources. It's really very awful when you take a step back and realize just how much we were lied to. So to your point, no, it's not debatable. You're spot on as far as all of that. And that's why I think so many people are euphoric about Trump coming in, regardless of what it portrays, to your point, for the economics, which we'll pivot to right now. And let's talk about the debt for a moment. Many believe the U.S. dollar is likely to weaken over the next few years. Trump has indicated as much. Do you agree that we will have to embrace a weaker dollar really as the only viable alternative, or solution, I should say, to our massive debt issue, our sovereign debt issue?
I don't know how much choice we have, and I don't want to get too wonky into the milkshake theory and all these other things that are straw-sucking demand for the dollar. I don't think the dollar is going to be replaced by the ruble or the yuan. I don't think it's the end of the world reserve currency status. I don't think it's the end of the dollar or the end of America. I'm not anti-American or anti-dollar because it's sexy or trendy or hip. I look at history. I look at math. I look at common sense. We can get into the short term versus the long term. I mean, first of all, look, when debt is up, the dollar is going to be down. And as I said earlier, history proves to us that you don't have much choice, whether it was the denarius in the Roman Empire. When it started out as 100% silver, within 200 years, it had 0% silver value. They had to debase the denarius. whether it's any currency, and you can use the classic examples in Zimbabwe and Weimar, those are extreme, or Yugoslavia in the 90s. But all the French in the 1780s, every nation, empire, monarchy, democracy debases its currency to inflate away its debt. We don't have much choice. When debt's up, the dollar's down. And all nations, especially modern nations, like whether it's Japan or whether it's the US or whether it's in the EU, you have to choose between saving your currency or saving your debt market. And since debt is the wind beneath our wings, the rotten wind beneath the wings of our quote unquote growth, we're going to save the debt market, which means we're going to long-term sacrifice the currency. We've been seeing that since we got off the chaperone in 1971, when we got off the gold standard. The US dollar, like every major world reserve currency, when measured against a milligram of gold, has lost greater than 98% of its purchasing power. So it's already happened and happening. It's nothing new. No one wants to talk about it. So, we've already sacrificed the currency to save the bond market. Again, just like the French did in the Revolution in the 1790s, and they had a thing called an assignat. It was just QE 1, 2, and 3 in the French version. We're the world reserve currency. We can do this for longer, and we can make others suffer and play this game longer. But inevitably, it ends with a weaker dollar, not just because we need a weaker dollar to pay off our debt, but there's 13 trillion in foreign dollar denominated debt, not necessarily 13 trillion owed to US banks, but debt traded in US dollar denominations that needs to be paid off. If the yields rise too high on the bond market, and if the dollar gets too strong, they're going to have to sell a lot of US assets and US Treasuries to pay those debts, or they become unpayable. That affects the stock market, that affects the bond market. It's a vicious circle. If they're selling US Treasuries to pay off debt or to buy energy under the slowly fading petrodollar system, that actually pushes bond prices down and yields up. When yields go up, interest rates go up. And so interest rates go up. It's just you're damned if you do, damned if you don't. There's no good options optimizable left. That doesn't mean the dollar can't go stronger in the short term. I mean, when Bush came in, I think in 2001, Greenspan was cutting rates in a fury, but the DXY went from 108 to 121. And then came down again. Right now, yields are up despite the Fed cutting rates, and the dollar's strong. And there's kind of this Trump notion that's a strong tailwind right now for the dollar. But as to your point, Trump needs a weaker dollar. He said as much. He wants a weaker dollar. Yellen, Jake Sullivan wants a weaker dollar. When the dollar's strong, everything suffers except for the dollar. Commodities, hard assets suffer. Although even gold hit all-time highs when the dollar was relatively strong, when yields were relatively high and inflation was so-called defeated, dollar still was hitting all-time highs because gold was hitting all-time highs because gold is disconnected from these old correlations. Because things are so bad now. It's no longer about whether rates are high or low, inflation's high or low, the dollar is weak or strong. Gold is kind of on its own track now because it's really replaced this US Treasury as a strategic reserve asset, as a savings asset globally, especially in the East. If the U.S. Treasury is less loved and gold is more loved, and the BIS, as you know, has made it a tier one asset, that should have been on the headlines for months, should have been debated every day. The ramifications of that should be understood by a plumber or an investment banker. The BIS has just made gold a tier one asset alongside the 10-year U.S. Treasury. What does that mean? What is the BIS trying to tell you? And what is the media trying to lie by omission by not telling you? It means that the world would rather save in gold than an IOU from Uncle Sam, because that IOU is losing value and that Uncle Sam is in debt up to his ears. He's no longer trusted because he's in debt and because he weaponized the dollar against a major nuclear power in 2022. If it can happen to Russia, it can happen to you. These things are immensely important, and they're not anti-American, pro-gold bug nonsense. It's common sense. And so all of these things, to me, point inevitably towards a weaker dollar. No one wants a stronger dollar, including Trump. And yet, the irony is, what's going to happen, he's going to get the inflation that he said he's going to beat. That I don't think he's going to be able to beat inflation. I think that's the one thing I wish, if I was his advisor, I would have said, don't go there. You can't say that. You can't. It's like Bush when he said, read my lips, no more taxes, no more. And for Trump to say he's going to beat inflation when he wants to do these tariffs, when he wants to do reshoring, which, by the way, I'm in favor of reshoring American jobs, but that's not going to solve itself in 4 years cheaply. And if he wants to make America focus and America great again and more nationalism versus global thinking or a global economy, these are all inflationary policies. Mass deportations are inflationary policies. And so I think if he had just been more honest, I think that his base would have believed him anyway. We're happy to cut the fat in DC, give pink slips, etc. We can get into that. That's not going to be enough, though, when our debt to GDP is what it is. He's coming in now with 36 trillion in debt, entitlements, interest, and defense spending. When he was elected in 2016, was 65% of tax receipts. Now it's over 100%. There's not a lot of wiggle room for him to cut the fat, so to speak, or cut spending. And I think, and I'll stop in a second. Obviously, everyone's talking about Elon Musk and Vivek, two very smart guys, well-educated guys, self-made guys, understand business. They know how to create layoffs, right? I mean, what Elon did with Twitter/X and the pink slips there, they're talking about 75-80% cuts in the DC swamp, and like Department of Education, just get rid of it. Okay, optically that makes a lot of sense. They're talking about $2 trillion in cutting fat in DC by the next 2 years. They probably could do it. That'll be done fast and quickly, like a hard pill. It'll be very tough for the people working in the suburbs of DC, commuting on 66 every day into their agency jobs. But even if you suggest that you can accomplish $2 trillion worth of cuts of the fat in the DC bureaucracy, which almost looks Soviet-like, I admit it, it's gross. But you know what? That's a lot of jobs. That's a lot of money. You got to find replacement jobs for them. You got to pay for them. That's still going to cost something. But the real issue to me isn't even that. If you cut the Fed funds rate by 25 basis points, that takes $25 billion off the interest expense. So you have to fire a lot of people in DC to equal $25 billion, when just monetary policy of cutting rates will accomplish that even faster. And so I think the Fed is going to want, and certainly Trump is going to want to push rates closer to zero every chance they can get. We'll see if the Fed is accommodative or not. But I think Trump wants a weaker dollar. But again, it's still going to be inflationary. Even if Elon and Vivek accomplish what they're trying to accomplish with pink slips in DC, and the optics of firing all that fat, all that useless bureaucracy, which we have in Europe in spades, and which DC is getting fatter with every day. That's very sad for people who work for the Department of Agriculture or the Defense or other places they're going to see pink slips, but it's still going to be inflationary, just like tariffs are. But again, he can accomplish a lot of that, but I don't think he's going to be able to beat inflation. The only thing that's going to beat inflation is a depression or a recession of the highest level, like killing demand and killing the middle class even more, or market mean reversion. That would be disinflationary temporarily. But to solve all these problems, you're going to have to spend. And Trump spent, and Biden spent, and Obama spent, and Bush spent, and Clinton spent. Anyone elected spends to make their campaign promises happen. It's great that the DOJ wants to cut some fat, but there's still going to be extraordinary spending. And finally, I will say, if Trump really wants to clean the swamp, it's not just going after the bureaucracy. It's going after K Street, the lobbyists, the wolves of K Street. It's big tech, big pharma, big media, and frankly, even crypto, which was his biggest donor in this election cycle. If you're really going to be an independent revolutionary leader and really make America great again, you got to get rid of the legalized bribery and the base layer incentives, which is big business, which has killed democracy faster than anything else, in my opinion. And I think that would actually put a dent in the debt to GDP that's going to be an anchor on him. And if you really want to beat inflation, you're going to have to cut entitlements and military by 40% at least. If he does that, well then, my hat's off to him. But short of that, I still see a long-term inflationary outcome. And short of that, I still think we're going to have to fill the delta with our debt and our spending with mouse click money created out of thin air at the Eccles building, which is inherently inflationary. And that means a debased dollar.
Yeah, I couldn't agree more. I mean, if you just took, defense spending and Social Security and Medicare, that in and of itself would take just about all of the income tax revenue in and of itself. And defense spending is discretionary. And you talk about these mandatory entitlements, which they said are off limits. To your point, the Congressional Budget Office says that by 2031, 100% of tax revenue will go just to pay Social Security, the mandatory entitlement payments like Social Security and Medicare, which are off balance sheet, on top of the interest on the debt. So you can slash everything and it's not going to matter. And even if he does take $2 trillion off, we're still going to have $1 trillion+ deficit, which means he comes in at 36.5 and he leaves at 41, doesn't address the debt problem. which is systemic. And I agree. So let's talk about that for one moment. You mentioned his plans to reshore U.S. industry and jobs while raising tariffs. Have you ever seen the movie Shawshank Redemption?
Sure, of course.
One of my favorites. And, pardon my French, being that you're in France right now, be a little bit easier for you than most. But he had to crawl through 2 miles of shit in order to get to the other end.
Yeah.
And it seems to me that if we do this, if we reshore a U.S. industry, which has been offshored, which would need to be revitalized, it would have to be remodernized, you'd have to train, it would be costly, not to mention the cost of labor is so much more. It would be great. I'm all for it too. But not only that, when we talk about his tariffs for a moment, tariffs are a good thing, in my opinion, if done properly. But what his tariffs are, to me, are more along the lines of financial warfare. They're more along the lines of sanctions masked as tariffs. Because if you don't do this, then you're going to get this. Tariffs are supposed to protect your manufacturing industry. Well, we don't have a manufacturing industry, so what are we protecting? My question is, let's take him at face value. He's going to bring the jobs back. He's going to bring the manufacturing back. And we're going to go through this tunnel of 2 miles of shit. What does that look like? Yes, it would be good to get to the other side, but what does the journey through the tunnel look like for the average American?
Well, the tunnel looks like shit, right? and to your point, I think that's why if I was an advisor to Trump, I'd say it's great, but be honest with the people that it's not going to be easy to get where we want to get. Believe me, when the World Trade Organization, WTO, came out during the Clinton era, and there was this whole thing about China. This is great. This new allegiance bringing China to the WTO. They're going to buy all our blue jeans and radios and computers. No, what they did is they made all our blue jeans, computers, and radios. And our C-suites, our executives, offshored all our labor from the Midwest to China or El Salvador or other places because it was cheaper labor. So that didn't help America. That helped China. And it really gutted millions and millions of American workers. So no one wants to see a reshoring back to manufacturing back to the U.S. I totally agree with you. But that can't be done cheaply, and it can't be done in 10 minutes. And it can't be done without going through that Shawshank tunnel for a while. I think the Americans, like the Argentinians, if you get a leader who's blunt and tells you the facts, they're willing to make some sacrifices if it's equal and fair. And they're even willing to hear bad news if it's coming from someone they trust. And I think Trump would have gained more trust if he said, yeah, I'm going to bring productivity back to America. I'm going to bring manufacturing back to America, but it's going to hurt, guys. It's going to take time. And if we trust each other, eventually in the long run, that's very good for America. And to your other point, in the meantime, tariffs, right, to protect what manufacturing? The American dream is made in China since 2001. And we can blame that on the executives of these big multinational S&P traded, publicly traded companies who get paid by their share price. So of course they're going to pump up the share price by cutting down the fat on labor expense so they can get a third or fourth home in Nantucket, the Vineyard, and possibly off Palm Beach. Fine. But I'm a capitalist, but there's a point where that's not capitalism anymore. That's feudalism. It's making serfs out of the middle class, the working poor. Again, coming back from the Midwest, let's not lie to ourselves. It's great to be rich. It's great to be successful, but not when wealth inequality is an insult to the average American. What Walt Whitman called the heart of America is your middle class. We've killed it. We've killed it. The Fed killed it. Politicians have killed it. Our foreign and domestic policies have killed it. So I'm all about protecting U.S. manufacturing, but not when we don't have it to protect yet. So these tariffs are just another form of weaponization. It's a tax on imports. And that's going to be inflationary. And it really is weaponization. But look at what has weaponization done for the dollar, for America, since we sanctioned Russia, since we stole it, since we basically defaulted our own treasuries to them. It just created a ripple effect of distrust in the American system, the American currency, the American IOU. I'm afraid that Trump doing this now is only going to create more distrust, more currency wars, to Rickard's point. It won't be a hot war. It'll be a financial war. Don't underestimate the BRICS. 50% of the population of natural resources, of oil, of precious metals, GDP, they're not going to just bow to whatever America, whoever's in office, says. The art of the deal may be to bluster, but they're not going to bend that easily. We're going to create, I think, more polarization. Now, you could argue that by putting tariffs on imports that are coming in from China, you're basically telling American companies that are trying to make a living by making American products in China and then bringing them back to America, get your butts back in the U.S. because you're going to be paying a huge premium. And for that, there's a brilliant incentive there. But between that, like you said, that tunnel entry and that tunnel exit, there's a lot of crap to walk through.
Yeah.
And I think he should have explained that more clearly, because there's going to be. Yeah,
I agree, and it's the little things like the little things like that. That little bit of transparency goes a long way. It's just like Biden pardoning his son as a father of 3 kids, and my oldest being my son. I get that, but be honest about it, or at least pardon Trump while you're doing it at the same time. Have a little bit of quid pro quo, and just say this shit's going to end right now, or we're going to fix our country and start by stopping the infighting. Just more of the same deception. Let's talk a minute about the BRICS. I got a few more questions for you, but I was gonna save this question for a few more. But since you mentioned it, with Trump's warnings to the BRICS nations about their plans to challenge the dollar, and again, I don't like tariffs that are masqueraded really as really a sanction. And I think that's what this is all about. This is what the BRICS in a nutshell is all about, this coercion and the sanctions because I don't think the BRICS are mad about tariffs. I think they're mad about sanctions. And so how do you see, as a result, their gradual shift towards a multipolar currency system and a common settlement currency unfolding? Because if you look at Trump's language, he talks about a common currency. They haven't been talking about a common currency for a long time, and to Rickard's point, that's a decade away. I'm cool with that. But their unit settlement currency that has been slightly derailed because of the shenanigans with BIS and Enbridge, but it was a settlement currency pegged to gold. Do you think that all of this stuff, what we see with Trump, will only accelerate their idea of a multipolar currency system and a common settlement currency?
absolutely. Short answer, absolutely. Why wouldn't they? I would. Wouldn't you? Again, if I have an account at Citibank and they just froze my assets tomorrow, and I called you, I'd say, Andy, don't bank at Citibank. You can't trust them, right? I don't even know what I did wrong. I said something wrong. I wrote something wrong, and they froze my assets. You're not going to trust Citibank again, and you're not going to recommend Citibank again. And when you froze, I mean, even Barack Obama in 2015 said, don't weaponize the world reserve currency. John Maynard Keynes said that. Robert Triffin came to Congress in the 60s. You can't do that. It's a neutral reserve asset. Don't weaponize it. If you do that, they're going to find someone else to look at. And of course they did. And of course they're not. I've always said from 2022 Q1, when we weaponized, we weren't sanctioning Venezuela and Iran. We were sanctioning Russia, a major oil exporter, right next door and in bed with China as a major oil importer. That's going to be irrevocable. That's going to have huge impacts over time, short term, near term, and long term on the U.S. dollar, on U.S. trusts, on U.S. hegemony, etc. And the tariffs, I think, are only going to make that worse. Again, trust is a hard thing to quantify, but it's no coincidence that, as you have said brilliantly, and we can talk about Enbridge and Kazan and what happened in South Africa, but if you have said brilliantly, 30 countries are repatriating. Why? Why are they repatriating their gold? Why do they want to keep their gold? 45 countries are trading outside the U.S. dollar. Why? BIS just made gold a tier 1 asset. Why? Why are Eastern central banks stacking gold net since 2014 and dumping U.S. Treasuries net? Why? And why has that accelerated since 2022 at such a level? Why is the UAE and Saudi Arabia in bed with the BRICS, joining the BRICS, our major petrodollar allies, already looking east rather than west? These are not gold bug arguments to create sensationalism to get you to buy gold. This is history in motion. This is the hockey puck moving. And Gretzky said, track the puck where it's going, not where it sits. This is not sensational. This is history. This is happening right now. And of course, the hockey puck is moving away from the U.S. dollar. It's not replacing it. It's not the end of the dollar. It's not the end of America. But it is repricing it. And to your point, Trump isn't quoting himself correctly when he says it's a new BRICS currency. It's a trade settlement currency. They're going to still keep their currency. They're still going to have their home currencies, but they're going to net settle in a currency. Enbridge has already hinted at what it's going to be. It's going to be backed by gold, escrowed, and held within their own borders and not redeemable in China or Moscow. So I've always made the joke, if you take your girlfriend to dinner, things might be going pretty well as far as you know, but if she's staring at the waiter most of the dinner, the problem may be not that night, it may not be that weekend or that month, but there's a problem in the relationship. And eventually she's going towards the waiter. And just because it Kazan, Enbridge, and BIS flip-flopped, and BIS probably got a phone call from DC or Paris, but just because we didn't see that happened in the East this year at the last BRICS meeting, you already know that the UAE and Saudi Arabia are more than happy to net settle outside the US dollar when it comes to energy. And we already know that China's, and Kyle Bass saw this years ago, China's main focus is to find an energy solution that isn't dollar-based. They don't want to buy oil anymore in dollars. And by the way, the OPEC nations really don't want to be tied to this dollar anymore. It doesn't have the value or the yield it did in the 1970s when we made this deal. So again, this isn't a gold bug argument. This is history and politics that no one wants to see because the media, which is owned by 3 companies, lies by omission every single day. It's what they don't tell you that you need to be paying attention to. And again, so what happened with this, Enbridge? It didn't become ratified, so it was a big joke. Let's go to Bitcoin and forget everything, and everything's gold is done. No, you're already seeing your girlfriend flirting with the waiter. You know what she wants. She just hasn't done it yet. We know what Saudi Arabia, the UAE, and the BRICS want. They just haven't done it yet. They're in motion. We can see their thinking. And the Enbridge, this decentralized trade settlement currency, backed by hard assets and gold in particular, which is kept within their own borders, is exactly, it's not even plan B. This is what Russia and China, the BRICS, have been wanting for years. And when we weaponized the dollar, that gave them the perfect pretext and the perfect motivation to no longer trust the US dollar and the US Treasury. And to your point as well, the tariffs are only going to be another form of weaponization, another reason to distrust the American dollar and IOU. Again, not overnight. It's going to take time. But we see the direction of that puck now, and Trump coming in with his chest out. That's the art of the deal. If you want a horse, ask, if you want a dog, ask for a horse. Go in there big and tell them what you're going to do. But I don't think, the short answer is, I don't think the BRICS are going to bend. Collectively, they have too much power. In the U.S., again, I'll say it, not as an anti-American. There's no one more patriotic or frankly more capitalistic than me. But we are not the America of free price discovery, of Thomas Jefferson. We're not the America of John Smith or John Adams. We're not the America with the flag over Iwo Jima spreading freedom. We're not. We've brought calamity to Afghanistan, to Iraq, to the Ukraine. We're not that Clark Gable America anymore. And I still love America. We may be able to get there again. We're going to have to do a lot of cleaning, a lot of hard talk about real debt like any family or business would do. We're going to have to be far more honest and more transparent. But I think the dark state is too dark. It's bigger than even Trump or Vivek or Elon, but I hope I'm wrong. There's a lot going on there. It's hard to unravel in 4 years and even harder to do in 2 years. But look, whatever Trump's going to do, he's going to have to do it fast and furious, as I said, because there's midterms in 2 years. And if things go well, it's going to be great for his party and his, because he can't go to another election after this, but it'll be great for J.D. Vance or the next Republican. If it goes badly, it's going to be a washout. But he's doing so much disruptive Shawshank walking through the crap that I don't know if it's going to be good right away. But I think right now, short-term dollar's stronger, markets are up, yields are up, Fed funds rates coming down. There's a lot of misleading contrary currents, but the end game is still debasing the currency. Trump really does want to reshore jobs. He does want to do the right thing with excess spending. All those are great optics and great plans, but they don't happen overnight, and they don't happen cheap, and they don't happen without ripple effects. But I think if he keeps the dollar down, keeps the Fed funds rate down, could be still really good for Bitcoin, really good for the S&P, which is way overvalued when you talk about markets. It'll be very good for gold and silver long term. But again, I'm boring. I look at gold 10, 20 years out, not 10, 15 minutes out. And so I have no doubt, based on the debt realities of history and the debt circumstances in the U.S. and Europe right now, that gold is just in the first chapter of a very long book. It's just beginning now. It's just beginning. And Bitcoin, of course, is a whole other fantasy story, but it's still valid. It's still important to discuss, and it's still the speculation asset of a lifetime, of a generation.
Well, we'll talk about Bitcoin in 1 second, and I agree with everything you said. And, speaking of lack of trust, it's the BIS Innovation Hub that helped develop Enbridge with China, Hong Kong, Thailand, and the UAE for 4 years. Yeah. And then at the 12th hour after it's operational, the BIS comes out and says, by the way, we can't stand behind Russia or any country that is being sanctioned by the West. So we need to back out of Enbridge. It's right out of a James Bond movie. Yeah. It's espionage. I mean, did they just realize that ours is Russia in BRICS? I'm not sure. But anyways, I digress. Yes, you can see through all of this conversation, the common theme of de-dollarization, of these countries banding together, is lack of trust, of no longer good faith anymore, which is this country was really founded on, and it's anything but. let's talk just a little bit about Bitcoin. You know, there's been a lot of talk about the reliance of the US Treasury market on stablecoins, where USDT and USDC, which are the main trading pairs with Bitcoin on all the exchanges, as a stable dollar stablecoin, are 85% primarily backed by treasuries, the other 15% roughly dollars. Tether USDT was constantly under investigation. Everyone thought they were getting in trouble. They had Bitcoin on their balance sheet, and then all of a sudden that stopped, and now their balance sheet is almost all treasuries. So my point to you is, given the reliance of stablecoins like USDT and USDC on the US Treasury market, tying them to the traditional financial system, do you think cryptocurrencies like Bitcoin can truly disrupt legacy finance, or do they even realize that those going into these cryptocurrencies are unintentionally reinforcing it?
I think I like where you're going with this, Andy. I couldn't agree more. And by the way, Luke Groman kind of had a eureka moment with this too. He's openly pro gold and pro Bitcoin. So is Larry Lepard, a good friend of mine, brilliant guy. So I'm not here to poo-poo Bitcoin or mock it. We need to put it into perspective. But the short answer is, and what Luke's been kind of coming up with, I can't take any credit for it, but it makes perfect sense to me now. And the ironies abound. But I think it's almost like Bitcoin is an entry-level drug into stable coins in a desperate backdrop where cryptos have gone from being, and Bitcoin in particular has gone from being the speculation asset of a generation, the speculative tulip of a generation, if you want to be mean, to now a political tulip. That makes it a far more powerful tulip, because I think Bitcoin is really going to be inflated to inflate stable coins, so that stable coins can absorb those unwanted, unloved U.S. Treasuries to take the pressure off the Fed and the supplementary, all these other liquidity measures we've been doing backdoor. So in a way, if you got to reflate an asset, reflate Bitcoin, reflate stable coins, and then use that to absorb Treasury that no one wants. And that is so twisted and sick and so perfect for the dark state and so perfect for...
It is, because the people buying would have no idea that's what they're doing.
Well, the great irony is, and look, I've spent a lot of time this year in particular, not just trying to ignore Bitcoin. Its market cap is huge. It's getting bigger. I have a huge amount of respect for Larry Lepard and his Metcalf theory. And I like, obviously Ronnie Sturfel out here in Europe, big gold guy, but also understands cryptos. I don't think it's any help just to mock crypto or to have a gold versus crypto debate. I think they're apples to oranges. I don't think it's a debate. It's a discussion. But nevertheless, I've listened to guys like Mahlers and Voorhees, obviously Saylor. He seems more like a car salesman, but that'll upset people. But he's a successful car salesman. So he's right. Right now, price is right, price is value. But even, look, and we could spend hours. Look, the bottom line is you can get on this. What is money? Is it a medium of exchange? Is it a store of value? Is it a unit of account? Crypto in general, and Bitcoin in particular, is none of those things. You can say whatever you want about it. And God knows I wish I'd bought it at 500 and kept it. Of course I do. I'm jealous as hell of the price appreciation. There's no asset class in the world that can beat its annualized returns at a 5,000% return in 2013. You can't beat its performance, but its standard deviation is over 170%. Its maximum drawdowns are over 80%, 4 times. So it's not a store of value. It's certainly not a medium of exchange. Even in El Salvador, the success story, 1% of people buy and sell things in El Salvador with Bitcoin. What Bitcoin did for El Salvador is El Salvador got the best stock price appreciation in the history of national markets and paid off its debts with that. If Bitcoin had gone to zero, you'd blow El Salvador off the map. They are the beneficiaries of speculation gains. It is not digital gold. It is not a unit of exchange. It is not a store of value by any stretch of the imagination. And don't give me the excuse they're just consolidating. Again, doesn't mean you should make fun of Bitcoin. I'm all in favor of making money in the markets and speculating. I made it on a pre-IPO in the dot-com bubble. I mean, you take some risk, you deserve some reward, and I envy it. I joke, if I had bought Bitcoin at 500, I'd have sold it at 1,000. I would have had the guts to stay in this long. So, yeah, my hats are off to these guys. And I will say, and this is not insider information, all the time in Switzerland, very, very wealthy young people come to my office who have a lot of money in Bitcoin. And we have really honest discussions. And of course, they know what it is. It's a speculation asset. They're not worried about it being a store of value for their grandkids. They're making a ton of money. And now they've made a lot. They're willing to sell a big chunk of it and put it into gold because that is money. It's not sexy. It's a little boring, but that's how they're going to stay rich. And so I'm not against speculation, but let's stop comparing these speculation assets with a store of value asset. There's nothing wrong if you have a speculation mindset. And you can even speculate in precious metals. You better be good. That's a hard thing to do. But if you're a store of value long-term thinker, as Rick Rule said, it rewards infrequently but extravagantly. Precious metals will do just fine for you. But I really do believe that they did this with oil, and this is what Luke Roman said in the 70s, 1974. Kissinger and all these other clever, weird guys came to the Gulf states and said, "Guys, we're going to push oil up to the moon right now. We're going to push it up 400%." And by the way, Saudi ministers admitted this 10 years ago. This isn't a conspiracy theory. We're going to push oil up 400%. Why? We have a ton of post-Vietnam debt. The oil price pegged to the dollar goes up. That erases a lot of our debt. We're going to manipulate the markets. You could make the argument, if you manipulate Bitcoin and stablecoins up, that'll absorb a lot of that debt. And so there's an incentive now, and this is the great irony, because Voorhees and others said, I'm in Bitcoin because it's decentralized. I don't trust governments. I don't trust banks. I want to be free of that system. And yet Bitcoin, through stablecoins connection, is the most centralized, politicized, and government-embedded asset class there is. And it's a massive transfer of wealth for those who got in early and the majority control it. And it's going to be a tulip politicized to absorb US Treasuries. And to me, when you're relying on stable coins or even Bitcoin markets to help our debt prices, that isn't an indication of how strong Bitcoin is or stable coins. That is an indication of how desperate and debt-soaked our government is. But in the meantime, by the way, for you watching or speculators, I think Bitcoin's going to go much higher. I do. And if you want to speculate, the question is, do you know your exit ramp? Do you know when to get out? And if you do, great. And if you think it's going to go to $1 million, God bless you. I have nothing against that. I have nothing against speculation or even Bitcoin. I just don't like it when they compare it to gold. They have absolutely exploited the gold narrative to put wind beneath the narrative of Bitcoin as if it were a store of value, a unit of exchange, or real money. It never was, still isn't now, and won't be tomorrow. But it will be used as a sponge to get stable coins to sponge up unloved IOUs from a broke distributor like the United States government. And that is the height of all ironies to me. And that is not mocking Bitcoin. Honestly, go for it. I actually think Bitcoin's going to go up. But again, I see a lot of Bitcoin guys when they're really not on a platform say, come on, man, we know it's not gold. It's not digital gold. It is the speculation asset of a lifetime. But with that comes a lot of volatility and a lot of risk. And I think people just need to be big boys and girls about that if they can take that risk. I'm boring. Gold isn't that risky to me. It has no standard deviation that comes close to that. But that's me.
Dude, I've been in that boring camp for 35 years. I'm all for it. I gave an interview this morning, two people this morning before you. One was Chris Powell, which I'm going to ask you about in a few minutes, and the other was Francis Hunt. And what Francis said is exactly what you're saying, that about those young kids, that he said, if you don't have an on-ramp, especially when it's going this well, you never will. He says that the dopamine rush of seeing something move up and up and up and up and up is intoxicating, and that those who don't have an off-ramp are asking for trouble. And he said the exact same thing. He said that you buy a Bitcoin not because it's gold, but because it is a massive speculation that can enrich you and your family. And he said he called it the plug your nose trade. He says you plug your nose, you do it just because you're going to be enriched, but have your off-ramp. And he was saying he thought by spring, June or July, it would be time to realize that off-ramp. And he acknowledges the place to be ultimately is in gold and silver. So to your young kids that come in that have paid all of that money, let them listen to little Francis Hunt. It's exactly what he is saying. And saying, yes, you can speculate, but don't confuse money and speculation. All right, let's shift gears just a little bit. We'll talk a little bit about gold. I got two questions for you. I know it's getting a little bit late in Europe, so I'll let you run quickly. As I mentioned, I interviewed Chris Powell today, and I have said maybe 1,000 times publicly that all of us who own gold owe Chris and Bill Murphy a debt of gratitude for their tireless work in bringing the concept and doing it in a very articulate, meaningful way of government and central bank manipulation of the gold market, bringing it to the front page. Well, at least our front page. With central banks buying gold the way they are, I don't know how many times you've been asked the following question or the question I'm about to ask you. I know I've been asked 1,000,000 times. But the central banks are buying it, but they're the ones manipulating it. Some of them, not the ones that are probably buying it as much, and maybe some of them are playing the Western price to unload or to clear the shelves.
Yeah.
Do you think manipulation by the central banks and the bullion banks will ever end?
No.
Not the answer I was looking for.
No and yes. I mean, they'll never stop trying, but eventually, just like the Fed can't control the Fed can pretend to control yields, but the bond market ultimately controls yields. Eventually, the Fed will run out. And I think eventually, I mean, no, they'll never stop trying, but they're going to fail to do it. And so, look, in 1974, it was the BIS, the Fed, and the Bank of England that came in and had this great idea. Let's let futures contracts on the COMEX, and we'll drown natural supply and demand with these paper shorts. And of course, it's an open price fixing manipulation game. Why? Because gold terrifies governments that are in debt. Because when gold rises, that's proof that your fiat money is a joke. It's comical, and people are going to trust it less. So again, their biggest fear was rising gold, and they created a desk in New York and London to manipulate it. And the BIS from the central banks on down and the bullion banks below. Yeah, Murphy and Powell, they're absolutely owe them a massive debt of gratitude for being transparent and honest. People still want to deny that, but again, it's open and obvious. It's an open secret. More commodities, people know this and want to admit it, and the ones that don't aren't paying attention. But what's happening, though, why they can't control it forever, and you know this, I think, Andy, pretty much better than anyone who says it so people can understand it. I think that's been your greatest gift because, you commodities and trades and price numbers and options and all that can get really wonky to the guy in the street or the gal on the street. But they can understand simple things like supply and demand. And if you can manipulate these contracts to put an artificial price down, to put a boot to the neck of gold and silver, but you need, even with Basel III, and you need at least some physical gold and silver to manipulate, to hypothecate, and to lever those papers off of. And what you've been doing a great job over the last couple of years is showing the outflow out of these exchanges. And if there's enough of an outflow, because Eastern banks want delivery now. They're no longer playing this game of you pretend to buy, I pretend to sell, and then we just redo the contracts. They're taking delivery now. So there's less and less gold and silver on those exchanges to manipulate. And so that's how I say at the end, they won't stop trying. They're going to fail to do it. And so again, and the Fed at some point will have no control. They can control the Fed fund rate, but they won't be able to control the world dumping US Treasuries and yields spiking, and the Fed can do nothing about it because I still believe that supply and demand are laws of physics, and eventually they're stronger than the laws of ego at these banks. It takes decades to do, but just the outflows and the deliveries we're seeing on the COMEX and come on, there's going to be less gold and silver to lever and less gold and silver to manipulate. And what you're going to eventually see is something unbelievable, actual free price discovery in precious metals, actual fair pricing. And if the Shanghai exchange has a 200 moving day price that's fairly priced, you can't have a different one in London or New York. And that's why when we sanction the Russians in 2022, and if we're going to put tariffs, we're just going to make it even harder to manipulate and lie because other countries are smelling the bullshit, pardon my French, and they're creating a fair exchange. They're creating their own networks of trade. They're creating their own decentralized settlement currency, not BRICS currency. And they're doing exactly what anyone would do who's been tired of at least 2 generations of being the dog wagged by the tail of U.S. Fed policy and U.S. dollar policy. The jig is up now. It was great for many decades. We had the exorbitant privilege of the world reserve currency. It's our currency, your problem. But now it's our currency, our problem, because no one wants our U.S. Treasuries. And we've been too arrogant. We've been a bully for too long. And the world is turning away from us. The hockey puck's going away from us. Again, not overnight, but faster than even I thought was possible since 2022. It's moving faster.
Yeah, I completely agree with you. Last question, talking about gold. There's been a discussion. The head of the Dutch National Bank has talked a lot about it. We've seen Senator Loomis from Wyoming talk about it, and that is to revalue the price of gold. She said we should revalue the gold that is held supposedly by the Federal Reserve on behalf of the Treasury to a level where we can take some of the proceeds and buy Bitcoin to fund this strategic Bitcoin account. She spoke right after Trump did in the meeting in Tennessee, the Bitcoin meeting, where he said he advocated for a strategic Bitcoin account. Now, he wasn't talking about buying any. He was talking about that the U.S. already holds. I think they confiscated through criminal activity or whatever, and letting it run and using it to pay off the debt, similar to the idea of El Salvador, except without buying it. Now, she's saying we should revalue the gold and buy more with some of the proceeds to have this strategic Bitcoin account. The head of the Dutch National Bank has said forever we should revalue the gold to offset our balance sheet. And what's so ironic about all of this is that gold is held on every balance sheet across the globe in what is called the gold revaluation account. It's as if it's on the minds of these folks and has been for a long time, at least in terms of ultimately. So there is a talk of revaluing the country's gold supply, and it would help reliquify the Treasury General account. I've talked about that for quite some time. Do you think they'll do that, or are the unintended consequences of such a revaluation, i.e., enriching the countries that have been buying it so copiously? You know, you look at China; they haven't been forthright about how much gold that they own. They've been mining between 300 and 500 metric tons a year for the last 25 years. They're the largest importers. They're the largest producers. They're flying all around the world and buying doré and concentrate directly from the miners, disintermediating the marketplace. You think that that's something that we would do, and by doing it to get our balance sheet back in a manageable level where assets and liabilities offset, are the unintended consequences of doing such a thing too high for the take?
Great question. A lot of ways to answer that. First thing, be careful what you ask for. If you revalue gold, then who has the most gold? Because who has the most gold wins. And I can guarantee, I won't say guarantee anything. I can tell you my strong belief is the World Gold Council's official numbers of the gold audits for different countries is woefully inaccurate. And I think from my conversations from Singapore to Istanbul to New York, China has a heck of a lot more gold than the World Gold Council says. And there's a reason that central banks have been stacking gold net since 2014 and dumping US Treasuries. I don't want to live in St. Petersburg or Shanghai. I'm American. I plan to live in Virginia when I retire. But the point is, you can't say these countries are stupid, and you can't say they're naive, and you can't say they haven't suffered or they haven't been paying attention or they don't have some smart economists, whether it's Glassiev or the New Development Bank. There's some smart people in India, in Russia, in China, and elsewhere. And I think they've been quietly stacking gold because they're playing chess while the West, arrogant and full of its nostalgic past, when we saved the world from Nazism and all the other good things we've done correctly and greatly, they've been playing chess while the West has been playing checkers and living off of it. Yeah, living off of the fame of our greatest generation, but acting like spoiled drunken sailors with money that we don't really have and living on credit. And so they're stacking gold for a reason because, yes, at some point, world is going to naturally or unnaturally revalue the gold anyway. So let's take it to Loomis. Loomis is insane to revalue gold to buy Bitcoin. That's insanity. The Dutch are a little smart. Let's just revalue gold to pay our debt. But let's say, and assuming the audit of Fort Knox is correct and America has what it says, and maybe it has more, maybe it has less. But based on the audit, for every 4,000 per ounce revaluation higher in gold, that's $1 trillion in liquidity for the U.S. government. So if we have 36 trillion in debt, we'll multiply 4 times 36. That puts gold at around 140, 150,000, I guess, which is unthinkable. But we're looking at Bitcoin at 103,000 today. That's even more comical because unlike gold, Bitcoin doesn't have a use anywhere. It isn't a store of value anywhere. It isn't being traded or net settling oil anywhere. Central banks aren't stacking it anywhere. So, I mean, again, that'll upset the Bitcoin camp, but get past it. God bless you. You guys are still going to make a lot of money. Don't get me wrong. I'm happy for you. You're going to make a lot of money in the short term. But come on, why would you revalue gold higher to buy a Bitcoin that has a standard deviation of 166 and isn't used anywhere in the world and won't be by China or Russia anytime soon? So the real trick isn't whether we should revalue gold to buy Bitcoin, it's whether we should revalue gold. And I don't think we could do it overnight for 8, 12, 15,000. I think that would be too much. I think we'll toe dip slowly towards higher, stair step it up. But you think about it, I think the chess players here, and I'm not promising, by the way, if you buy gold today, it's going to be revalued over the next 15 years to over 100,000. But I do think that's exactly what the central banks are planning. watch what they do, not what they say. They're playing chess. They're stacking. It's like the three little pigs. The one little pig builds the house of straw and plays in parties. The other one, house of mud, plays in parties. Does the Bitcoin, goes to South Beach, goes to the best hotels and buys the Ferraris, and they come to me to buy some gold. I've seen those three little pigs. I've seen the two little pigs who have straw.
They're fun to hang out with.
They're fun to hang out with. I was one of those guys in the dot-com bubble. But then there's the pig who builds the brick house. No pun intended, the brick house. And the bricks are building a brick house. Gold bar at a time, from south to east, and they're certainly pushing east, not because they're stupid, but because they're playing the long game. They're playing the hockey puck direction, and they're patient, and they've suffered, and they've been through a lot more. And so I think, and I hate to say it because I'm American and I'm a European, they're gonna get the last laugh. It doesn't mean the East doesn't have troubles. It doesn't mean China doesn't have serious banking risk or currency risk or political risk, or that Russia doesn't have serious problems. I'm just saying, but they've been encouraging and thinking longer term, and the only asset that is real money for thousands of years for a reason. And they've been letting this Bitcoin hysteria go for a reason. And they've let the kids of the little piggies play. The little piggies are playing with their straw huts and their mud huts, and their
Ferraris.
And their Ferraris. So I think revaluation will happen. It won't happen overnight, but I think you're gonna. And again, that's one more reason maybe to speculate in gold. But regardless of revaluation, gold's only going up because paper money is going down. And no amount of stable coins and Bitcoin euphoria short term under the Trump promises is going to change the fact that gold holds its value a hell of a lot better than digital or paper assets. Just the way I see it.
Piepenburg, brother, you are not only are you a hell of a nice guy, you're brilliant, and you're articulate, and I see you up in Vancouver this year in January.
I'll be there in January. That'll be great.
This time, and
awesome.
We can catch up.
Looking forward to it.
And I really enjoyed this, man. In fact, this might be my favorite interview I've done. And you're right, we've agreed on everything, and that's even better. Tell us how people can get to know more about Gold Switzerland, about your writing, social media. Of course, we'll post all the links in show notes, but just to cap things off, man, how can people get to know more about you? And if someone does have $5 million and wants it to be in the mountains in Switzerland, I'm cool with that. There's enough to go around for us all. And someone like you who is so nice, well, I'm happy to send them your way. So what do they need to do to get in touch with you?
Yeah, well, you can find me and all my articles and interviews and egons on goldswitzerland.com. The company's called von Greyerz.gold, and it used to be called Matterhorn Asset Management. We just named it after Egon von Greyerz because he's our founder and mentor and iconic figure. We want to give that homage to him while he's very much still a part of it. Nothing else in our business has changed, but the website has both Egon and my interviews and articles, and it also has a lot of pre-education on not just why to own gold, but how to own gold, staying out of the commercial banks, avoiding ETFs, not just with a physical gold bias, but with some real data that I think can help people understand. If you're serious about gold as a wealth preservation asset, not just because if you're speculating, go use the ETFs, but if you're really trying to own and not rent gold, you got to get physical gold. And there are different ways to think about that in different jurisdictions. And so that's all there. But it's just goldswitzerland.com. And again, we talk, 99% of people we talk to don't meet our minimums, but doesn't make us not interested in talking about gold. We want everyone. Anyone can afford a gram or an ounce eventually. And we want everyone, whether you're, again, a dentist, a lawyer, a doctor, a surgeon, a plumber, or a Bitcoin zillionaire, you can still buy some gold. And just think about it as, we buy health insurance, car insurance. Why shouldn't you buy currency insurance? And that's how it is. Again, real simple.
Couldn't agree more, Matthew. The one rule my father imposed on me when I started this company with him 35 years ago, February, was that I would buy something every 2 weeks or he'd fire me. And he didn't care if it was 1 ounce of silver or a gram of gold. He didn't care. And it's the best gift anyone's ever given me, ever. And it taught me the laws of compounding, the laws of paying yourself first. And you're right. And if you realize to invest in your future with sound money whenever you can, little bits. You don't have to spend a ton at once, but just get on a regimented plan. You wake up one day, I still feel like I'm 19 sometimes until I get out of the chair and like, oh God, my back is tight, but you wake up one day and you're like, wow, where'd all the time go? And if you let the laws of compounding be your friend instead of your foe, it's a good thing, man. You're awesome. I look very forward to picking up where we left off. I'm gonna invite you back on the show sometime in the new year. I look forward to having that beer with you in Vancouver. And just as a side note, it's one of two conferences I go to for all the listeners. Jay Martin's Vancouver Resource Investment Conference, along with Rick Rules down here in Boca, in my backyard. The one in Vancouver, which is the longest possible flight I could take from Southern Florida, is worth it, and I wouldn't miss it. I'll look forward to picking up where we left off there, but I wish you and your family happy holidays, a very happy and healthy 2025. I hope it's a great year for the Piepenburg family, and just thanks for coming on, man. You made my day, and I look forward to chatting with you again soon.
Yeah, too kind, Andy. Yeah, we'll see each other very soon in Canada. It'll be great. Yeah,
all right, brother. You stay well, and you look chilly, so stay warm. Not that problem down here in Southern Florida. Just had to get one little dig in there, but it's all good. You look, and thanks again, Matthew.
Hi, buddy. Cheers.
Little by Little with Andy Schechtman.